Hey, next time maybe we'll do this conference on Mars, huh? So the way it's going. Guys, thank you for the welcome. Very excited to be here. As was just mentioned, my name is Henri Arslanian, and really my passion and my focus is the future of the financial services industry. And I tell people I'm very lucky I get paid by PwC for doing this as a day job. As mentioned, my background, I'm a lawyer, a banker, and I am a university professor. And really, we spend a lot of our time right now in the crypto space, and we're going to give you guys some examples. What my goal today is very simple. I want to share with you all some of the latest trends that we are seeing in the broader crypto space, not only with ICOs, but also crypto funds and banks getting into crypto desks. And my goal is after this couple of minutes, either you're looking at launching your own ICO, you're looking at launching your own fund, some of the guys in the bank are thinking potentially launching a crypto desk, or you're just looking at investing in them. This can give you some more color on what's happening on that space. I live between New York and Hong Kong. Literally, I spend 2 weeks a month in Hong Kong. My wife and family live in New York, so it's a pretty long commute. But the beauty of this is actually there's a lot of crypto activity, as you guys know, between these two verticals. Before I start, I always give this big warning. I always tell every audience, whoever tells you they're a crypto expert, man, you have to run away. And you have to run away pretty fast. I swear, man, we have, right now, my direct team right now, we're working on 20 ICOs. We're advising half a dozen crypto funds, advising a number of exchanges and banks getting into crypto. And I swear, I have no idea what's going to happen in 1 month from now. It's actually, I find it's the most humbling space to be in. We're actually with clients and with the community, we actually we get engaged and we decide we're going to try to solve the problems together, which is, I think, very a good way from the community to operate. The thing I always tell clients, this is industry, it's dog years. A week in this space is like 7 weeks in the normal space. You can just look at all the developments that happened over the last 48 hours in the crypto space globally as a good example. So what I'm going to focus on today is very simple. I'm not going to talk about too much of the cryptocurrencies, but I'm really going to focus on a lot on utility tokens, and also going to talk about the asset-backed tokens as well that we're seeing quite a bit, and some of the issues and actually trends that we are seeing from that perspective as well. And also I'll try to touch upon it towards the end on some of the security tokens and what we are seeing from that perspective as well. Sounds good? Good, excellent. First, let me start with the ICO space. It's been very interesting. We got our first ICO client at PwC was here in April. You can imagine the discussions we had with our risk committee and senior management on why we had to get into the space. And it's been obviously quite an interesting ride from there. What's been really interesting from our perspective, especially when you look at this at a global level, when we were in mid-November, many of us believed the market was going to soften down a bit until at least probably Chinese New Year. And boy, we were wrong. And as you guys saw, December was a record month. And actually this year, 2018 will probably be a year that's another record year, probably by the half of this year. The other thing, the one thing to bear in mind though, and despite all the media coverage that we see about ICOs and all the buzz around it, maybe ICO numbers are a record high. Again, it was pretty easy. What's really interesting is if you look at the broader financial services ecosystem, ICOs are literally not even a dot, not even a line on the graph. If you compare to the equity capital markets or debt capital markets, we are really at the very early stage when it comes to this ecosystem. And what's really interesting as well, when we look at it, we work with a number of regulators. I personally sit on the Hong Kong's regulators advisory board on crypto and on FinTech. It's very interesting to see how different countries are reacting to it. I mean, if we start with China, I will never forget this. I was in Shanghai getting a massage, and the massage lady was telling me about ICOs. And I remember stood up and I was like, wow, this is incredible. I was actually always a big supporter of the ban of the ICOs in China. It was completely out of control. I mean, the massage lady talking to me about it was a great example. But what's really interesting, we've seen how certain countries have adapted to it. Let me give you 2 examples of Hong Kong and Singapore. What was really interesting for us is actually in both these jurisdictions, regulators came up with very clear guidance and saying, if you're doing an ICO and what you're doing is a security, you have to follow the existing rules. But what if you're doing is genuinely you're building a utility model, you're building a token ecosystem, then actually it's outside of the regulatory framework. You still have to do a KYC, AML, and follow some of the anti-fraud rules that apply all the time. But this clarity actually gave a big boost to the ecosystem. What's also very interesting with that is how we've seen clients start approaching ICOs. I remember last summer, it was literally people coming, had the idea, it was a complete mess. It was really rushing and trying to get things in order before the public sale. And what we're starting seeing right now is really entrepreneurs approach ICOs in a way, way more organized manner. There's an example we use where it's very high level, but some of the timelines actually when you're doing your token sale. What's really interesting, especially for someone like me who come from the banking world, is when you see the timeline with this. Our average client right now, we're engaging before an ICO, they're generally 3 to 4 months before their public sale. So the time to actually, from idea to actually when the launch is happening has been quite interesting, how that has been actually being quite steady, but also how much more organized it's becoming in between. But even what's fascinating, and this is really, really what I love, is the rise of best practices that we are seeing in the ICO space. A lot of people talk about ICOs are a scam, it's really guys laundering money. I mean, there's obviously a lot of fraud, and I'll give you guys some examples of fraud. But what's been really interesting is when we see some of these best practices being developed. I actually believe what happened with this summer with Tesla actually was one of what the Lehman Brothers moment for the banking industry was. Long-term capital management for the hedge fund industry was one of the game-changing moments. I remember before the summer, I used to talk about governance. How are you going to deal with the conflicts between token holders and shareholders? How are you going to transfer the IP? Nobody was paying attention. And I'm quite happy some of these big, more public incidents have created some spotlight. And now people are taking these topics seriously. And I call this the wheel of fortune of crypto, but these are really different verticals where we are really seeing the emergence of best practices. And what's been really amazing, all of this happened in less than 6 months. And I'll give you a couple of examples. Let me start with, these are 4 examples I'll focus on. Let me start with the first one, KYC and AML. Sounds very boring, right? But I can tell you in the crypto space, this has become a very, very interesting topic. I remember 9-12 months ago, nobody was doing KYC on any token sale. Right now, I can tell you all of our clients right now have very in-depth KYC and actually AML policies that are being implemented. I lead our RegTech, FinTech practice as well in Hong Kong, and I can tell you that I genuinely believe that the KYC quality and security that our ICO clients have is way better than what banks have. Right now, if I send my passport, I take a selfie with my passport, there's biometric information that makes sure that it's actually me with my passport. Whereas if I go to my HSBC bank or any other bank, let's not name banks, it's filmed. There's a teller who comes at me, looks at my passport, says it's a true certified copy. It's been really, really interesting. The other thing that's been interesting for us is seeing how a lot of RegTech companies, we used to try a lot of RegTech startups, we used to bring them inside of banks. How so many of these companies, RegTech startups right now, have made a complete pivot and don't want to deal with banks anymore, and they're just focusing on crypto. And it's been very interesting to see how some of the latest technology now is not being used by banks, but actually by crypto startups. And there's a number of things, I mean, from a sanctions monitoring perspective or risk-based frameworks. Despite all the good efforts you do if you're an ICO or even if you're a crypto exchange to do KYC and AML on your clients, some will go through the cracks, for sure. Big banks spend billions of dollars a year, to do AML, still people are able to launder money. What we're seeing actually ICOs right now is come up with a risk-based framework. Say, okay, we're going to do KYC and AML, but actually if somebody's investing X amount, we're going to do this type of test. If somebody's going to do this or is from that country, we're going to have a risk-based framework to make sure that actually we tried our best efforts to avoid dirty money to come in or to avoid criminals to come and invest in our token sale. And that's been very, very interesting how the industry, without any regulatory obligations in many cases, decided to actually lead and come up with best practices. The other one, tax accounting and transfer pricing. I can tell you when we launched this practice, we spent 2 full weekends with our accounting guys trying to see how we're going to look at crypto, put them in IFRS and GAAP frameworks. Accounting rules, double entry accounting that was done 300 years ago, I can guarantee you was not made for crypto. But we have no choice. We have to find a way to actually bring the crypto space for some time at least in the standard framework. And this is really, really fast. I'm not an accountant by background, but I can tell you our accounting and tax guys genuinely get excited now when they talk about tax for crypto. Talks about the tax footprinting of issuing entities. I saw somebody last week who told me, yeah, I just did my ICO. I did it in the Cayman Islands. I said, great. I said, what's your tax footprint? He's like, no, I did it. I'm doing it in the Cayman Islands. I have no tax to pay. I said, who told you this? He goes, I'm my buddy at the meetup. Guys, there's one thing I should tell you. Please do not get tax advice from your buddies at the meetups, please. There's a number of clients that come to us right now who've done their ICOs over the last Q3 or Q4 of last year, and it's actually too late. And try to explain then to your token holders why you've lost 20-25% of the money raised now has to go to the IRS because you didn't take the basic precautions. The other one we're seeing, by the way, is transfer pricing. This happens with a lot of ICOs, where your dev is done in India, some of it is done in Ukraine, some of the management is in the US, and you're doing some of the sales in Hong Kong. There's a lot of transfer pricing issues that are coming up, and these are very important. You look at that from a get-go. Also, the founding team. All the ICOs have a founding, the tokens that go to the founding team. The way we actually structure these are very, very different to ensure, or else it becomes recognized as revenue income. And there's a lot of, that's a whole complex different topic from that perspective. So a lot of these issues are coming up from an accounting perspective. I can tell you right now, none of the big four audits crypto entities. Last year, believe it or not, a lot of the big four asked clients who had crypto to sell the crypto, go to cash, so they could audit and then buy back the crypto. This is not going to work this year. I'm actually very confident this year there will be solutions. We will be able to audit crypto entities. I'm very, very hopeful from that perspective. The other thing is legal and regulatory. As a lawyer, I can tell you, I mean, I'm a nerd. I find regulation super exciting. But I can tell you, really, in the crypto space, it's been really, really super exciting. You know, obviously, everybody sees all the big announcements, you know, the regulators coming out with guidance, the bans, you know, some of the positive news or the negative news. But I think what's really interesting is some of the really legal practice that have been developed to deal with crypto. For example, like the IP transfer. I see a number of entrepreneurs now set up funds where the IP is being developed before their ICO. Have you thought how the transfer is going to happen? There's often a tax consequence to it, but also how the rights will be managed without the IP. And you saw in the press, there's a number of scandals now with some of previous ICOs on that perspective. Terms and conditions. Every single client comes to us, they copy it from somebody else. And they tell us, Henry, can you just review it? That's fine. Everybody's going to do it. But please make sure you get this reviewed by proper lawyers. And again, your buddy at the meetup that has a cousin is not the right guy. Okay, the other thing, by the way, which often clients get in trouble is social media marketing. This is one thing I can really give, one personal piece of advice is when you're doing your sale, you have somebody who's putting information on Telegram, on different, on Bitcoin Talk and others. Make sure that information is being reviewed by somebody. This year, there will be enforcement cases for sure. In the crypto space, there's a lot of guys doing really good things, changing the world, and actually, as we saw this over the last 48 hours here, but there's also a lot of bad apples. And actually, one of the easy, low-hanging fruits for regulators is to go, especially when you're trying to market to the public. So please make sure any marketing material you're having is reviewed before going out to the market. Last, with governance and controls. This is, again, fascinating topic. You know, nobody will actually, if let's say we're going to launch a business, raise $50 million in equity, we would have some kind of governance framework in mind. Same applies in the crypto space. And this is really the issues that have been really complicated. Once again, I say whoever tells you doing governance on any crypto entity, whether it's an exchange or an ICO is easy, you have to run away. Issues like we're seeing right now, conflicts between token holders and shareholders, where the value now being created is actually happening in the tech token ecosystem, not at the shares or the equity. We have a case right now with an ICO where the VC investors that were there before the ICO want to exit. How do you value the company now? How do you value those shares? Token economics, I mean, we talked about it today. Very, very complicated, and you have to start looking at some of the topics beforehand. Use of proceeds, how the money is going to be spent, what kind of reporting you're going to be giving to your token holders as you're moving forward. Conflicts of interest, again, another big topic we're seeing. Or even stuff like very, very basic, like media policy. Who's allowed to speak to the press? Tomorrow morning you get hacked. What's your reaction? What's your BCP plan? And actually, this has been very, very interesting for us actually to draft these policies for clients to make sure they have that appropriate information in place and are ready in case something happens as well. But there's still a lot of issues. It's been very, very interesting, some of the issues we've been seeing. One of them, regulatory uncertainty. You guys see it with the ICO space. I mean, literally every day. This week, for example, a lot of our clients have stopped marketing in Germany with some of the new rules from BaFin in Germany. New Zealand. Our clients have locked down New Zealand for 2-3 months now because of the regulatory framework there as well when they're going for token holders. Some of the big issues we're hitting regulatory, bank accounts, again, everybody knows this, it's still the biggest single issue for all of our clients across the globe when it comes to the crypto space, is to open a bank account. Cyber fraud, again, fake Telegram channel. You guys all see this. I mean, literally now when we work with clients, a lot of them, in 3 to 5 hours after they launch their website, there's fake websites popping up. I'm actually quite impressed how these guys are doing it. I mean, the fake Telegram channels, everybody sees that. But actually, some of our clients now are working with some Israeli firms who actually go and actually bring down those websites. I don't know how they do it, but it's a different issue. And last one is cost. You know, as an entrepreneur in the heart, I have to say, the beauty of ICOs maybe 9, 12 months ago was actually the cost of launching it was actually quite reasonable. 2 guys in a garage could have done it easily. Right now, actually, it's very interesting how the landscape is changing. This is becoming quite expensive. Believe it or not, I tell every client, you have to budget at least $500,000 to $1 million if you really want to do a true global ICO token sale. Not only the cost of marketing, putting some stuff on, I mean, now you can't put ads on Facebook anymore, but the cost of going on your roadshows, the legal advisors you're going to get in different countries, reviewing your material, to even running the business and actually then even listing on an exchange. And where often you have to pay a certain fee to be able to go on an exchange. And what's been really interesting is these rules change very, very quickly. One thing I'm very proud to say is actually, you know, at PwC, we put out a guide recently of best practices to ICOs. You can download it, you can Google it, you can find it. But also what I've been really, really amazed is how the community has come together. One of them is the FinTech Association of Hong Kong. By the way, I just got elected the chairman of the FinTech Association of Hong Kong. In November, we put together best practice documents for ICOs. Because a lot of members of our community were coming and saying, we want to abide by certain standards. We know regulators are not going to be able to regulate fast enough. But what can we do to ensure that we respect certain best practices we can abide with? And I'm very proud to say now there's been a number of these initiatives going on around the world from that perspective. Secondly, let me touch on crypto funds. I saw a number of people over yesterday, today, came and talked to me and said, Henry, we want to launch a crypto fund. What should we do? It's been really interesting for us. I spent a lot of years in the hedge fund industry. I even wrote a book last year on how to set up a fund. It's funny, the book is back on the best-selling list because people are buying it to set up crypto funds. I can guarantee you I never saw that coming. You know? When you look at obviously I mean, these numbers are already outdated. You know, I have to change it every week. But really what's been interesting is the rise when you see of altcoins, and we talked about it today. I won't go more in detail of it. How really now there's actually pretty good ecosystem if you want to launch a fund. However, what's been interesting is now for institutional investors. I just gave a talk 2 weeks ago. I was in Arizona to a room like this in a hotel where there was $1 trillion of AUM in the room. It was pensions and endowments. Very interesting fact. We did a little survey before the talk, and we asked, do you invest in Bitcoin or cryptocurrencies? You know, and there's a number of questions. 44% of the room said that if I even propose the idea to my investment committee, I will get fired. 44%. But this is why I tell when we are at blockchain conferences or meetups, we all live in a bubble here, right? We're all in a crypto bubble. We think it's cool. You know, I mean, the fact, PwC, we got paid in Bitcoin last November. And we didn't do this because we thought it was cool, it was fun. It was really to show our commitment to the space and how we believe in the crypto community. But what's happened actually with firms like ours, a firm that's more than 100 years old accepting Bitcoin, or now with the launch of the futures markets, institutional investors now have to make a decision. They may think Bitcoin is a complete loss, it's a Ponzi scheme, but they need to take a view right now with the rise of this field. That's been really, really interesting now. We're getting increasingly interest from institutional investors coming to us and say, hey, is there somewhere that I can invest? I want to get some exposure to the crypto space. It's unlikely you're going to see a pension fund or an endowment or a foundation, you know, with the buy ERC20 tokens, but you're probably going to see them go put money into funds. And this is why there's been a rise of crypto funds over the last couple of months. The 2018 numbers will definitely beat the 2017 numbers when it comes to launch of crypto funds. But there again, there's many very unique issues. One is regulation. Obviously, licensing regulations for fund managers never took into consideration crypto. Right? For example, a lot of jurisdictions, like one example, Hong Kong, give a few, tells you need to have 3 years of relevant experience in the last 6 years to manage a fund. But honestly, I'll argue that an engineering background or being a programmer is more relevant to managing a crypto fund than having worked at an investment bank and wearing a nice tie. But this is something the regulations are not made for. So we're seeing a number of issues right now, the biggest one being custody. I'll touch about it in a second. Custody is, again, our biggest problem for crypto funds today. You guys know this. I mean, when I go talk to regulators, often a lot of regulators want to be able to regulate the crypto space. But often many of them, the rules say that you need to have independent third-party custodian. People still remember Bernie Madoff in 2008, where they were self-custodying and self-administrating their assets. The rules are drafted. They cannot change the rules that quickly. So that's what we need to come up as a community, some solutions, whether it's multi-sigs or in cold storage, that actually can tick the box for regulators. Bank accounts, I discussed it. Tax is another interesting one. Most jurisdictions around the world, when you're managing a fund, there's actually provision in the law where they say the fund will not be taxed. It's not subject to tax. And I mean, if you're managing from there, you'll pay your taxes, but the fund is always tax neutral. Most countries do this to attract fund managers. It's a very lucrative, as a type of say investor community you want to have in your jurisdiction. The problem, once again, these laws have never been drafted with crypto in mind. And it's been very, very interesting, some of the challenges we are seeing right now for people managing crypto funds and the issues they're having. But again, there's a number of issues. I won't go into all of them right now, but one of them is, for example, counterparty risk. If you're buy and hold a fund, it's easy. You can put it in cold storage and it's pretty secure. But what if you're trading day in, day out? You have exposure to all these counterparty risks, to all these different exchanges. And how are you going to mitigate that? Another one, obviously, we're having is an accounting policy. I talked about it. Another one we're having is actually how you're able to liquidity management. Depending on how often we're seeing some funds launch where there's liquidity mismatch between the terms you're giving to your investors and actually your trading strategy. If you tell your investors they can actually redeem their money once a week, or you invested in very illiquid altcoins, how are you going to deal with that? So there's a number of issues we're seeing from that perspective that are super interesting. The other one I would say is crypto desk, and everybody read it in the news. We talked about it yesterday on the panel. Some of the banks are launching crypto desks. I see some of guys from banks in the room as well. It's been very, very interesting to see how actually now financial institutions are starting to look into the space. I have to say, I see a lot more what I call new investment banks. Many of the big groups you guys hear in the press, these are new crypto entities, crypto fund management companies who are coming up and trying to address the ecosystem. But the problem for banks even to get into this space is actually quite complicated. Entirely, we're doing work on this space, and it's very, very difficult how you're able to put a crypto ecosystem in the spaghetti of an existing bank. From everything's like ongoing monitoring. How are you going to make sure your traders at the bank are not front-running? How are you going to make sure, for example, the controls? Who's going to actually manage the keys in a bank when you have an organization like a big organization that is already licensed? And we're having a number of these issues going on, for financial institutions. It's actually very interesting to see how that evolution is going. And what really amazes me is when I hear a lot of bank CEOs talk about, no, we don't like Bitcoin and we believe it's not here to stay. But then actually some of the biggest investors I know who invest in our crypto fund clients are actually the bankers who work at those banks. So it's been very interesting to see that transition going on from that perspective. So I'll finish it off, guys, quickly on some of the big risks we're seeing definitely when we look at ICOs and funds and desks. When we talk at a lot of these gatherings, I think we all agree, people will say, one of the big risks we have this year are a big black swan event, a big cyber attack that's going to come and really, a bit like a Mt. Gox in 2014, is really going to destabilize the community. Personally, what I'm really worried about is not about a black swan event. I'm actually worried about bad apples. I can tell you this is really what really keeps me up at night is people who are trying to make a quick buck by the ICO ecosystem, trying to actually raise some money. I mean, you guys all see the fake websites and all the stuff going on. That's what really worries me. And this is why I really believe as a community we have a duty to make sure we can auto-police ourselves. Right now, for example, before I take any crypto client, I check around. And it's amazing how your reputation goes to probably the most valuable asset you have in the ecosystem when you're doing such projects. I mean, there's been so many of them. I mean, my favorite one, I mean, everybody knows the ones in the porn industry. The one that I actually find the funniest one is a guy came out of prison in Macau. It's a gambling enclave next to Hong Kong. His name, I kid you not, is Broken Tooth. His nickname and name, he goes by Broken Tooth. He just spent 14 years out of prison. He comes out of prison, he says, I'm going to do a $500 million ICO. And obviously, in the media, in the press, Broken Tooth is doing an ICO, like you see here. And this is the kind of stuff we have to avoid. It's really this kind of guys and really giving a bad rep to the community And I mean, there's a number of projects. It's been really impressive. A lot of projects we work with are experienced entrepreneurs, people who genuinely want to change their world, want to do something good. But unfortunately, a lot of the press is covered by some guys like these. Then there's the funny ones. Jesus Coin is my favorite. I don't have the video with me, but there's a lot of these ones I just find comical that we all know about. But these are actually more comical than anything else. And there's a number of fraud. I mean, you know, somebody else called me yesterday again. Just invested in ICO, realized it was the wrong ETH address. It was complete fraud again. These things happen, right? So please be careful on it. What's the answer? New regulations? Should we have actually lobby for new regulations in crypto space? If I tell you new regulations, this will be a reaction. Actually, and honestly, regulations. I was telling you, I have no idea what's going to happen 1 month from now. We cannot draft regulations fast enough. Is it going to be policies? Trying to change regulator government policies? It's very, very difficult once again. And I really believe the solution to this is self-governance. For us as a community, we have to come and put some standards that we believe we have to abide with. And actually, when people are doing an ICO or actually launching an exchange, they say, these are the standards we want to abide with. And I mean, this is some of the initiatives we launched, the one of the FinTech Association I was mentioning, but some of the others as well. But I really, really believe this is going to be the solution in the short to medium term to make the community, and we're always as weak as the weakest member of the group on this one. Guys, thank you very much. I think if you have a couple of minutes for questions, but thank you very much for your patience and for your time. Thank you.
Thank you, Henry. That was fantastic. We do have time for questions that you would like to ask.
Great talk, Henry. Just a question about, somebody has to ask me about Broken Tooth. Did he launch his ICO? Is there a Broken Tooth coin? Did he make his 500
So I'll tell you a story. I was actually very curious. I was giving a talk last Friday, and somebody told me actually that I have to be careful what I say here. But he was affiliated with a company who actually did an ICO. It turns out he was not part of a founding team. At the press conference, for some reason, the founders believed it was a great idea to bring him along at the picture with the media. No, I mean, that ICO was very funny because they were giving economic exposures to casino junkets. I mean, that was the whole pitch. And honestly, I mean, I don't need to tell you guys that's not what you should be doing for an ICO. Yeah, but so it's interesting. But I mean, I remember that day because I didn't know about this, and suddenly I had all the newspapers and journalists call me and say, Henry, like, what do you think of Broken Tooth? And I was, Broken Tooth? Like, what is this, you know? Well, yeah, but they got it. I mean, I don't know, God knows what happened to them, but may God bless them, and I wish them all luck, but we try to avoid that. Thank you for your question.
Could you give us some good reasons for doing an ICO, and then also some reasons that people think are good, but are not actually good reasons to do an ICO?
Yeah, very good question. So the one good question is like, why, actually good reasons to do an ICO, why not, right? Often when we get a lot of people come to us initially, they're like, I'm like, why do you want to do an ICO? What's your token ecosystem? What are you trying to build? Often when the first answer is, I think it's a good way to raise a lot of money, that's often the answer is no. I actually genuinely believe for a lot of projects that are going on right now, we're genuinely building an ecosystem. There's a lot of merit in doing an ICO and trying to build the value in the ecosystem. Are all the, on utility tokens, are all the ICOs worth that? Is it the right model? Potentially not. And I actually believe many, if not most of the ICOs will fail over the coming years, actually, and from that perspective. What I think it really becomes interesting, and that's what we're seeing more and more, I don't have time to talk about a lot here, but is asset-backed tokens. If I look at the year 2018, I think 2017 was really the year of the ICOs, utility tokens, and cryptocurrencies. 2018 is going to be really the year of asset-backed tokens. And we're seeing a number of projects right now, you know, where it's backed by gold, by cash, by securities, and many other assets. The problem there, I can tell you, it's extremely difficult from a governance perspective. When you have 1 million tokens, we can audit the code, we can say that there's only going to be 1 million tokens issued. But how can you guarantee that the asset you have, and that will be correlated? I mean, I don't want to name names, but it's like there's some coins out there you can buy in the market today that say they're backed by US dollar, for example. I don't know how these things are backed. Honestly, I don't know how it's proved. I mean, you need to be able to prove it. There's a number of projects going on. It's very, very difficult. Again, the way it happens for us to be able to put a seal on it to say this is actually the way it works, it's very complicated. We need to audit it, make sure there's management controls, governance around, be able to audit the underlying, make sure that the code is correct. It's super complicated. And we need to test it for a while as well. I actually believe that's where things are heading. There's a number of projects going on right now, as you guys know. I really believe that's where we're going to see the ecosystem move along, and that's super exciting. The third thing I would say is on the securities tokens, where people call it ICO. I don't think it's the right way to call it. It's like the latest batch of 500 startups. I think it's called 22 or something. Projects like these where you're able to raise money with only institutional investors or accredited investors using some of these new platforms, but on the crypto side. I think those are interesting projects to go into. But again, I would tell you the majority of the client conversations we have, we actually turn them down. We say, honestly, you should not be doing an ICO. But I have to say, we're maybe quite lucky because generally the guy who wants to scam and make a quick buck generally does not come to PwC, normally. I had one, it was 3 days ago, a guy called me, I won't name the country, but he said, Mr. Arslanian, I want to work with you, we want to build an ICO. I said, fine, perfect. So I asked him, I said, okay, what's your KYC policy? He's like, I don't want to do KYC. Well, so this conversation is pretty short. So it's really a mindset issue of how you're building the business. And I have to generally say, there's a number of people in the community, and many of you guys are in the room here, who are genuinely building businesses for the long run, change the world. Clients who want to build a business for the next 5 to 10 years. And those are the guys I like to work with. But c'est la vie, huh? There's always going to be bad apples on that perspective.
Great. Thank you so much, Henri.
Thank you,
That
guys.
was fantastic.
Thank you. Thank you.